in the chat by James Boyd. I'm happy James is here. When you're swing trading, sometimes you have a lot of questions that come up. So feel free to ask those questions. I'll keep my eye on the chat. James will have my back as well in case there's something that needs to be answered, maybe by him, because maybe it's out of what I can't get to. Okay. I hope you're following us on X. I'm Connie Hill, CS. James does a ton of posting, so you want to make sure you're following James. He is James Boyd, CS. We'll post little observations that we see out in the market, things maybe going on with charts that we think you might find interesting. Would love to have you follow along. All right, let's go through our disclosures and get going with our agenda here today. What we talk about is for general informational purposes and education. Don't consider it a recommendation. Options carry a high level of risk and are not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. That's a little bit of a difference between paper money and our live account. Paper money will not emulate that functionality. And we will be using the paper money software application here today. Investing involves risk, including the loss of principal. Past performance is no guarantee of future results. Won't reference any futures here today. Sometimes we might, but I don't think we're going to use any of those futures here today. All right. Just want to give a little nudge to some events we're having coming up. Anaheim, Houston, Miami. First one's a market drive. Second one is a workshop, technical analysis and options. And this last one in Miami is going to be an advanced options workshop. So if you're able to get to one of these events or it's close by, take advantage of it. Okay, it's a fantastic opportunity. All right, let's see here. James, he's got collars on lots of things. Maybe there's good reason for that, huh? Yeah. All right, we're going to take a look at the market, see what's going on right now. I want to discuss some swing trading concepts that you want to have in mind for any kind of swing trade that you might be doing. And then we're going to be looking at several examples here, examples that are new, as well as some examples that we put on last week. So let's head over to Thinkorswim. Got SPX up. It looks like, it's up a little bit right now, 0.07%. Right, you guys have probably been following the markets. Up a little bit, down, actually down a lot, run up, down, kind of a little bit off, kind of a little volatile in the sense that it of which direction it's going throughout the day. It's changed its mind a few times. Looks like here, with our implied volatility, interesting that it's dropped off so much in the last little bit. What would that mean maybe as far as option pricing goes if you're an option trader? Maybe some of the implied volatility has kind of come out of it. Let's take a look at our volatility index. This is what gives us an idea. Hey, are things volatile in the market? Are people fearful? And they're doing what you guys said James was doing in his class, buying lots of collars, buying long puts, something to maybe hedge your different bullish trades. And so, had this big spike here in volatility, and we had some selling off action. Looks like the last 3 days it's been dropping back down in the 17.5 range, which is not super volatile. Kind of getting down into a more relaxed area, although not guaranteed to stay there. All right, let's look at the NASDAQ because it's behaving a little bit differently here. I guess it's up now, okay? It's up a whole 0.02%. Okay, so just barely holding its head above water. There had been a new high yesterday, and looks like I don't think it surpassed it here today. I'll have to put up my low and high bubbles to see that for sure. But overall, you can see the indexes have been still kind of bullish, right? Blue is a 10 exponential moving average. 30, or the red one is the 30-day exponential or simple moving average. They just kind of give us an idea of what the trend is of the markets at those points. And I want to pull up the Dow Jones because the Dow has actually been a little bit stronger here today. It's up 0.58%. And you can see it's getting close to where its high point was back here. That might have gone a little bit higher here today. Go turn on those high-low bubbles. I had turned them off for something. I can't remember what. Just turn them back on. Okay, new high set again today. And the market's pulling back off of that. But obviously, when new index highs are occurring, we're still in a bullish market. All right. Let's see here. Let's talk about some swing trading concepts, okay? When we are swing trading, we're looking to trade kind of a part of the move. We're not necessarily trying to nail the bottom of the move or nail the top of the move, but we're trying to trade that chunk in between those 2 points, okay? And you might get 80% of the move or 50% of the move, something, right? You're hoping for more than 20% of the move, okay? And it may last a couple days, it might last a couple weeks, but we're not planning on being in the trade very long. And we want to be really active with our stops, continually moving up stop losses, putting it in targets from the get-go, adjusting those stop losses every day so that you can kind of cinch up your stop loss and try to capture some unrealized gains that you might be seeing in some of the trades here. Okay, so keep those ideas in mind. Sometimes we might exit prior to reaching our target if we're seeing some weakness come in on the stock. If we're trading an option with it, that swing move, we might say if we're not getting half the move in half the time, we might want to go sell that option off if it's, say, a long call or long put, simply because time decay starts eating at us. But we're going to focus quite a bit here on charts. Now, we did 3 trades last week, and we're going to go through them real quickly. Most of our time I want to spend on some new trades. And on a couple of example trades that we did here, we're out of, I think, all of them now. Okay, let's hop on over. And let me clean this up a little bit. Option strategies. Here's our swing trades. We were in one today. Okay. We have a 0 quantity, so we're out of it right now. This one, we actually made a little bit of a profit on, and I was cinching up the stop loss. See, PCG. I was cinching up the stop loss and earlier in the day and just kind of moving it from the low of yesterday to the low of today because the candle was up here. I made a mistake on that and accidentally closed us out of the trade. So we made a little bit of money on it, but really we should still be in the trade because we were moving our stop loss up, just kind of taking into consideration this bottom trend line of the channel. And the stock's had been moving along in it. So if you get another entry on that particular one, somebody might consider it for an entry. Our other 2 trades, we got stopped out of. Okay, I know, sad, it happens. Somebody asked us yesterday in a different class what happened to Peabody Energy because it was in a nice little channel as well. We were taking the bounce up off of it. That's the day we got in with the green highlight on that candle. And then 3 days later, as it broke down below the channel and below a recent low, then it hit our stop loss. Okay. The other one is Dash. And same thing happened with it, right? It's been upward trending for the most part. It was trading in this channel. We took the little bounce off of here and it ran up really high to here, didn't quite get to wherever our target was. If you'd been watching it like a hawk, you possibly could have got out a little with a gain of some sort for movement from here to here. But then as the day wore on, we had a lot of selling off activity. It went down below our stop. So, it happens. We don't, we're not happy that we get stopped out of things, but we are happy that we're minimizing our risk and not beating up our account by taking undue risk or having major losses that we didn't plan for, didn't position size for. Okay, so that is what happened with those 3 trades from last week. Today, we're going to take a look at another tool for measuring to identify targets. Last week, we used the channels like we're seeing here. And this week, something that was interesting is a lot of these fall into one of 2 categories. Either they are breaking out of a triangle or they are breaking above diagonal resistance and maybe are pivoting from being something more bearish to something more bullish here. Okay, so let's take a look at our first one. Workday, W day. There we go, Workday. It had been channeling down. You can see this downward channel it had been in. Found some decent support here, started making a little bit higher highs and higher lows. So you can see our moving averages started trending bullishly. And then here recently, we've got some low points that were getting a little bit higher, but our high points were getting a little bit lower, forming this triangle here. Maybe yesterday at the close, somebody might have felt comfortable that this had been maybe broken out through this diagonal resistance line here on the triangle. Or maybe would have waited till today to get a little bit of confirmation. Because even though it's out here above it a little bit, you might not have been convinced until you saw some confirmation. And today we are getting the confirmation of that. Okay. Now, how many of you study price patterns? How many of you pay attention to those price patterns? How many of you draw them in on the charts? Go ahead and answer me on that. One thing to keep in mind with swing trades is many times they can be very technical in nature. And because we're not in there that long, 2 days, maybe 10 days, we're not as concerned about the fundamentals of a stock. We're more concerned about the technicals of the stock just because we're not planning to be in there for a long time. If it's something we're planning to be in for a very long time, yeah, we definitely want to pay attention to those fundamentals. Okay, so Jay Richardson, Kelly, J.A. Sunke, all right, Gina Favors, James, all of you are looking for price patterns on the top, on your stocks. You're drawing them in perfect. It's helpful when we see these patterns because it can give us an idea of where our potential target might be. Okay. And with swing trading, we do want to put in a target, even though it may change as the trade develops. We might adjust it a little bit. We're certainly going to adjust our stops. So with a triangle, what we're going to do is we're going to measure the height of the pattern. And on the height of this pattern here, that is basically the same move we're going to expect of the stock once it breaks out. So today's our breakout day. We have the height of the triangle. And typically what I'll do with this is I'll go to the second point in the triangle, meaning here's the first one. Chronologically with time, maybe get a different color here would be better. All right, so here's our first point. All right, and then the second point is where it basically goes and hits the other line. So this is going to be our second point in the triangle. And then I drew this horizontal line that's the height of the pattern. I'm going to come over here. I'm going to duplicate the drawing. And I'm going to move that duplication right to the breakout zone. So I'm going to do it on the breakout today where we might view that. And that would be our intended target there. Okay, so I put my mouse here, it's saying maybe up to about 267 and change. So we're going to go 267 is going to be our first target. All right. Now you could put on additional targets after that. You could go back in time. You could look at support and resistance, maybe see where some resistance levels were. But that's a pretty hefty target right now. And so if we're just trying to trade the meat of the move, all right, the breakout day is today. We didn't get in right at the beginning of when it broke out. And we're not going to necessarily plan on getting all those pennies, even though the target goes up a little bit higher. Okay, but it is a sizable target for us to reach. Where would you want to put a stop? Now, if you're looking at this, you're analyzing the price pattern, where would you put your own stop loss? Okay. Answer should be, well, if it breaks back down into this triangle, we need to be out of it. Okay. So if something happened today and it dropped clear back down into the triangle, or tomorrow it dropped back down in, would want to be out. Now, we could put it really, kind of in the middle here. We could go all the way down to the bottom edge of the chart. I'm just going to kind of put it in the middle because really, if it were to move from where it is right now down to maybe a little bit below that 30-day moving average, we'd probably want to be out. It's really not breaking out on us. It's a false breakout, or something in the market's changed. Something in the news of the stock has changed, okay? And it doesn't look like it's going to continue with the move. So let's put our stop there. My mouse is in the neighborhood of about 232. All right, so we're going to go 232. 17. Okay, we'll take the pennies on that. All right. Skywine's saying, I use the Bollinger Bands a lot. That can absolutely be a fantastic tool to help identify maybe what swing move you might want to target. But let's go ahead. Let's put this one on, right? We've got our, I should put equals our stop here so that we have our couple of values. Go to the trade tab. We're going to do it on the stock. And we're going to get that stock in here. WDay. And let me sync up my charts here, make that go to the red one so that it'll automatically change over. All right. We're not going to do an option on this. If you were an option trader, there are lots of options that you could consider using. All right. In this case, we're going to use the stock. If you were going to use an option and just say buy a long call, make sure that you have at least 30 days worth of time to help avoid time decay issues and however long you think it might take to make the move. So we're saying, I wouldn't expect this to make it in 2 days, certainly, no way. I mean, it could, but not as likely, right? But we might want to give it a few days to get up here. So maybe we might buy a couple of days worth of time in that scenario. So we might come out here maybe to the December options just to make sure that there is plenty of time. And you can see in the open interest, there's lots of open interest. We love to see that. Okay, so that gives us liquidity in the options. You can see the spread here is 40 cents, which is very reasonable as far as the percentage goes. So let's go ahead. Let's enter into our trade, and we're going to say buy custom with OCO bracket. We're going to do 20 shares here as far as position sizing to our account value. And we'll go ahead. This first one is intended to be the target. All right, so that's where we're going to put our 267. And the bottom one is intended to be our stop loss. So you can see the STP order right there. Our stop area, we said about 232.17, although we're going to change that. We're going to, every single day, we're going to adjust that and move it up if there's been a move in the stock. If it's kind of the same, then we probably would just leave it alone. But we do want to make these good till canceled. If it does hit the stop, we don't know what the exact price would be because we're saying just go trigger a market order, get us out of the trade just as soon as you can. Take the first price that's available. All right. Let's see here. Chuck says, but it is at the resistance with the high candle. It is maybe a little bit below that. When we're trading price patterns, we might not care a lot about that. If we're trading on, say, candlestick patterns, then those you do pay attention to support and resistance because candle patterns are much stronger at that point. But in this case, we're just trading the price pattern that we see. And so we're not going to involve other studies in it. We're not going to involve, we're really just focusing on the price action of the stock. So I don't think it's a bad thing to notice that's where it is, but it's not going to keep us out of the trade because we are trading the breakout of the triangle. Okay, I appreciate you bringing that up because that certainly is a valid consideration. Let's see, need to fix the stop amount. Well, I'll go back and take a look at that. It says wait till the dollar cools off, then jump back into gold, possibly. Those of you that maybe might be discussing the gold trade going on right now. Let's come back here. It was supposed to be 232. So let's go change that, make sure it's the right value, 232.17. All right, we've got that in place now, okay? And again, we'll go up every night and adjust our stop loss. Let's go ahead and send it out. We're going to throw it out here into our swing trades bucket. Keep track of our swing trades. Now, we're not going to be meeting and talking about this for another week, okay? But the idea here would be, if it gives a nice long candle here at the end of the day, some people might consider saying, okay, at the end of the day, once we hit the close, let's go see what the low is. Right now it's at 239.74, and somebody might consider doing it 50 cents lower, $1 lower, 20 cents lower. You might have an idea. If it's a certain price of a stock, if it's $100 or more, maybe you go with 50 cents. If it's a $20 stock, you might do something smaller like 20 cents. Okay. It's whatever you feel comfortable with, or you could use percentages. All right. In this case, if this is where the stock really ends up today, then I might go and move that stop loss up. Okay. And hopefully by tomorrow, we will have moved it up. Do you use trailing stops to lock in gains? All right, good question, James. You could if you wanted to. Let's suppose on this trade, suppose we got halfway to our target. Say we got halfway to our target, so we're looking at this big kind of area here, and just eyeballing it here, it looks like maybe the midpoint's about 253. If you said, I'd be happy with those profits at 253, but let's see if we can get a little bit more out of it, you certainly could consider changing your methodology of your stop over to a trailing stop loss. Some traders find it easier to do trailing stop losses with stocks versus options. Okay, so certainly could do that. So let's see, Sky says some, I named them that they are in the scripts. Not really sure what that means, Sky. If that's a question, give me a few more details on that, or give James a few more details on that. Kelly says that's a $400 move. I call that a win. That would be a decent sized move, wouldn't it? Yeah, absolutely. Okay, let's take a look at our next stock that happens to be in a triangle again. This one is going to be ADI. Now, this is a tech stock, okay? And it has a little bit different, well, it does have a triangle on it as well. You can see these low points kind of started sloping up. So we've got our lower trend line going up, and then our resistance line of the triangle is catching where these lows are. And so maybe if you didn't even see the triangle there, you might have noticed, oh, it looks like it broke out of that diagonal resistance. You might have felt comfortable with it yesterday. It still has a little bit of confirmation still going here today, but it hasn't run without us. So we still have quite a bit of the move left that we could take advantage of. So we're going to take the height of the triangle. All right, so here's the first point in the triangle. Here's the second point in the triangle. So I drew from that line down to this line. Actually, it didn't go too far. Let's activate it. Let's draw it all the way down. Get every little last bit out of it. I'm going to duplicate the drawing. I'm going to drag it, and I'm going to put it where I see the breakout. So we're going to do it flush with, you could do it today. You could do it if you saw this yesterday and you like doing it where yesterday was. That might be a little bit more conservative. We can go ahead and do it there. Let's see where that would put our target. Well, that would put our target here up in the neighborhood of about 278. Okay, I'm dropping off the pennies. Okay, 278 equals the target. And then the same thing with the stop. If it comes down into the triangle again, then maybe it really is a false breakout for us. It's not really going to stay there. And so because we're right here, maybe a same thing. Let's go maybe about 234. Let's see, that's 234.55. If it really made that big of a move back into the triangle, we'd say, that thing is probably reversing on us. As it approaches and maybe goes out here a little bit, then you might move it up and maybe just use a little bit under that line or under the low, depending on what kind of a move it's made and how tight you want to cinch up that stop loss. Okay. For our initial stop, what did I say? About 234.55. Stop equals 234.55. Okay. Let's go over to the trade tab. This one's fairly liquid. It does have some weekly options here. On this one, we're going to use the option instead of the stock. Okay. Not all of you are comfortable trading options. They do require approval to be able to trade them, but we would still swing trade it. And what we might do in this case is we might look for our first in the money call that has a 60 delta. All right, so here would be, here's a 62 delta, and it looks like it's at the 240 strike price. And because it is an expensive stock, yeah, they are expensive options. But the spread there is only 40 cents. That is a nice tight spread. We love seeing that. Okay. So in this case, we're going to do the 240 call, but we're going to base the entries, or the exits rather, on the target and stop based on the price of the stock. If you wanted to, you could use the theoretical price calculator and calculate what the price of the stock might be. In this case, we're going to just use the price of the stock. So here is our entry price here. And we're going to do a first trigger sequential for our second part of the trade. Let's go here and create an opposite order. We're going to put it as a market order, and then we're going to put in the conditions there. We're going to make this one good till canceled. Going to click on this gear, and inside the gear, we're just going to put our conditions. Okay, so we're going to put them both on this page. You can do it both ways. You can put it both on one page, or you can do it with two separate orders. Kind of depends on what is more comfortable to you, what you get used to, then you might continue to do it that way. But on this one, let's use this first condition here. If the stock gets greater than or equal to our target, which is 278, we want to be out of the trade, right? Then if the stock goes less than or equal to where our stop loss is going to be 234.55, all right, then we will get ourselves out of the trade. Now let's make sure we come down in the box and make sure we have our arrows going the right way. So on this one, the price of the security is less than or equal to 278. That's not right. So we want to change that arrow around. We'll change that arrow to, or the stop price, let's see here. We do want that to be less than or equal to, there we go, less than or equal to 234.55. Okay. It's always good to go and check that. Make sure you've got your greater thans and less thans doing the same thing. Let's see, Connie, your greater lesser triggers are opposite. Thank you for catching that for me, Duke. Glad we did that. PL Anderson caught that as well. Now, Jack says, do you have to own the stock to sell a call if you have a put on that stock? Do you have to own the stock to sell a call if you have a put on the stock? Jack, suppose you do own the stock. That's not what we're doing in this case, but if you were the owner of the stock and you did want to like sell a covered call against it, you could, but that's different than what we're doing here. Here, what we're doing is we're seeing the move of that triangle. We're seeing a target up high, a stop down below. And the idea here is we're not going to be here that long. We are looking to just trade the meat of that move. Okay, we're not pegging the top totally. We're not pegging the bottom totally. But if we can get a chunk out of it, we'd be happy campers. Okay. Now, the part of your question here about if you have a put on that stock, you could have a protective put on it, and you might consider this a totally different trade, going out and buying the long call option. Okay, you would be an independent trade in that case. All right, we're going to say okay. We're going to hit save, and this is good till canceled. We're going to hit confirm and send. We're going to put it in our bucket for swing trades. And, you know, any one of those two trades we just did, we'd be thrilled to death if we were out of it by the time we met next week, right? Because we don't want to be in it that long. And if it goes up maybe to our target or close to our target, that we're like, I'm happy taking profits there, we're going to adjust those. And again, we're going to adjust that stop every single day. All right. All right, JB's helping me out with some additional information there. Appreciate that. Okay. Next thing. I'm going to take a pause here, and I do want to interject something for those of you that are a little bit more advanced in maybe your trading strategies, or you want to be more advanced in your trading strategies. Maybe you feel comfortable with some basic strategies and you're ready for more. We've got an an advanced options virtual workshop going on this week. And I'm going to hop over to, let me hop over to here. And I'm in my, I've logged into my Schwab account, my paper account here. And what I'm going to do is we're going to go to Learn. We're going to go to Schwab Coaching. We're going to just kind of scroll down here to the live webcast and virtual workshops, view that calendar, and we started an advanced options workshop this week. If you were not, let's come down to where we are. If you weren't there yesterday, that's okay, because they're focusing on different strategies and different elements each day in the advanced options workshop. Okay. I put up there, our next one's going to be in Miami in December at the end of the year. But if you could get in and use some of that knowledge, because we're going to go through the same information, you're going to have your same presenters. This is a fantastic opportunity to go ahead and join this. There's not a limit. There is a limit when we do things live. There's only so much hotel chairs that we can get in a room. But this one, it can be unlimited. We had about 6,000 people there last night. And hearing good feedback from that workshop. So take advantage of that if you're interested in that. The virtual workshop class, I don't believe is going to be posted. We did one in the past, but I don't think this particular one is being recorded and posted. We always record everything. It's just whether we post it or not. I don't think this one is going to be posted. Okay, but if you can get there, join it. What is the schedule for the live event? Well, if we go over to the live event, okay, we'll go back a screen. And if we go to the in-person events, that's kind of some of the information that I was showing you earlier, where we've got the Market Drive event in Anaheim, then workshop, option strategies and technical analysis together in Houston. And you can sign up for either one or both, okay? And then here's that advanced options in Florida. And then we start into the new year. Can you believe it, you guys? Then the next one after that, we start in January. So you can come out here, see maybe if they're coming to an area near you, all right, or somewhere easy to get to, or somebody that's a quick flight. And you're like, yeah, I want to take advantage of that. Please do, okay? We like to let you know when that's occurring so that you can get in on the news early. Okay, so if you want to have any interest, go ahead, reserve your spot. You can always cancel it. We're not going to get mad at you. And of course, they're free to you. Okay, you do not have to pay except to get yourself there. All right, we'll feed you. We'll be nice to you. We are way nicer to you than I even imagined. I should say nicer to you in the sense that we feed you, and not only your brain, but we feed you internally so your tummy is satisfied. Okay. Other thing I want to remind you of is just that if you haven't yet become a subscriber to our Trader Talks channel, go ahead, click on that link in the bottom right-hand corner down on the screen. Okay. That will allow you to find our content, right? Because coming up after me, Brent Moores is going to be doing After the Close. And then here's a link, the other way you can get into the Advanced Options Workshop, because it's going to start right at 5 Eastern today. Okay, so we're going to just be going bam, bam, bam. It's going to be the next event at the top of the hour after the close. Okay, so make sure to join us for those. All right, let's head back over to Thinkorswim. Knowledge says, hey, can you do a quick explanation of the difference between price trading and candle trading? I thought it was the same thing. And I think you might be referencing something that I mentioned. I said when we're trading price patterns, it's different than trading candle patterns. Okay, so for example, let's back up here. Suppose I just didn't have any lines on here. Okay, and suppose maybe we'll just kind of go back in time. Suppose I was seeing this candle here. These days hadn't occurred. And maybe I was seeing here, oh, that looks like maybe that's a piercing line where the body of the candle that's green is well into the previous day's body, which was a bearish candle. If that's at a support level, then it has more meaning, okay? And somebody might trade based on it, and then they might use previous peak areas as their target. When we have a price pattern, we're going to use the information that it is supplying us instead of using those other things. You can trading candles. You can see I've got candles on the chart. We absolutely are going to look at what's going on with the price action. So I hope that clarifies. All right. Jay Richardson is letting us know that tonight is Iron Condors. Ooh, ooh, ooh. We love the Iron Condor, don't we? We love everything. Okay. Thank you for posting that there, James. All right. Next up, let's take a look at one that is, oh, this is another triangle we have going on. I have about 5 trades here. How many of you would look at this and immediately recognize that it is a triangle? Some of you might, some of you might not. Typically, we have an upward trending line here to give us an ascending triangle formation. I'm going to say it hasn't been upward trending that long. To me, it's kind of been a little bit sideways, but the pattern can still be valid. Okay. And whether it's breaking out through horizontal resistance, I could see somebody maybe even looking at this as a little bit of diagonal resistance, that maybe it's popping through here today, looking at that as a triangle. So either one of those would be entirely appropriate. Same thing, we'll take the height of this, we're going to activate the drawing, we're going to plop it down here on today's breakout area. And then let's see, that puts our target near about 277, almost 278. Okay, we're going to go with 277.50. Interesting, most of these stocks were in the $200 range. They're all about the same price. Same thing, if you were using this as the breakout zone, you might be picky and say if it goes below there, you're going to get out. Because there's 2 lines and they're pretty close together, I'm actually going to take the one that goes inside that lower line. Okay, so the one that's inside the triangle with the diagonal line. And so, if it were to get down to maybe 247.78, you might consider getting out. Somebody might also go, this is that long, big candle today. What if we just go below the low of today's candle? We can do that. Today's low candle is 254 on the dot, the price on that. What if we were to go just $1 lower? Instead of 254, we'll go 253. Okay. We're going to put our stop there. And I like to give you guys different ways that you can put in a stop. It doesn't have to be exactly the same thing each time. But our target, we're definitely going to use the height of the triangle again. In fact, I guess I stole the height of the triangle. I forgot to duplicate it, but there it is nonetheless. That's okay. Let's go ahead and put in our order here. This one has great options as well. So those of you that maybe aren't comfortable, or are comfortable, I should say, trading the call, you might look for your first 60-something delta. You don't have to be 6-something delta. On this, we're just going to go ahead and do the stock, and we're going to look for about 20 shares. So we'll do buy custom with OCO bracket, and we'll put in our target, which we determined from that triangle, 277.50. And then we'll put in our stop loss, which is going to be 253. And if you guys want cents in there, you can put cents in there. I'm just kind of dropping it off for our example here today. And we're going to put this good till canceled. Same thing, we are going to be really active with this stop loss. We would consider changing it over to a trailing stop loss, maybe if we got halfway to our target, or we might just do it day by day. Day by day, we might just pinch it, move it up a little, move it up a little, try to lock in some gains so that you're basically minimizing the risk that you have. And maybe everything doesn't go all the way to the target, but at least you're capturing a decent part of that move. And that's the idea with the swing trade, is capturing whatever that move is that it gives us. Sometimes we don't get the whole move. And so we at least want to capture part of it, if at all possible. All right, we're going to throw this in here. We're going to put it in our swing trades. So we did 2 stocks. Oh, I did not adjust my share numbers. We got in with 100 shares. I'm going to have to come out here and sell 80 shares because I did not mean to do that. We really only wanted 20 there. So we'll just, let's have to get out of most of that trade, okay? Oh, what did it not like? I'm gonna have to go back and fix that here. I think it's because I have this other order in here. And so let's do this. Let's just fix the whole order. Let's cancel, replace the order. Let's cancel the OCO group and I'll just put it in fresh. All right, so I'm going to close out 80 shares. We're going to sell 80, not all 100. That'll leave us with 20. All right, we'll send that on and then we'll fix it and then we'll put on a closing order just on the 20 shares with a bracket. Did I do that wrong? I only sold 20 shares and kept 80 shares. I'll have to fix this. My time is up, so I'm going to fix it after class. What I'm going to do is sell more shares to get it down to keeping 20. All right, instead of 80 and instead of 100. And then I'll put on our target at 277.50 and our stop at 253. All right. You guys, if you want to get a hang of swing trading, practice these example trades or other ones, because that's how you get a feel for it. You get a feel for how you like to trade it, how frequently you like to increase your stop loss, if you want to be really active with it, if you want to use cents, if you want to use percentages, all of those kind of things that go into the decision making. You want to make sure that you are able to do that. So practice any of these trades and then you'll have questions. Next week when we get back together, we're going to check on all 3 of those trades. If we're out of them with a profit, happy day. We'll be happy campers. I'll show you that. And if not, I'll show you as well what happened with the trade. All right, you guys, after the close is going to be at the top of the hour. I appreciate you joining me here today. James, thank you for helping me in the chat. I don't think there was a survey here today, but if this was helpful, hit the like button on the way out. And follow James and I on X, Connie Hill CS, James Boyd CS. All right, we'll see you guys at the top of the hour in our next class. Bye-bye.